Happy New Year! It's Josiah back with Simple Finance, and I'm glad you're able to join us here for us to help you make budgeting simple. Budgeting is a bit of a daunting word to some, but I want you to think of it as a way to give yourself permission to spend without guilt. I hope you don't mind this new format where you don't see me, but you're going to see my computer screen, and we're going to work through a budget together. And I want to do this at the beginning of the year here in January 2025 so that you get the right start to your new year. Now, I use what's called a zero-based budget. This means that all your income either gets spent, saved, or transferred into different categories, and and it becomes a zero balance at the end of the month, where all of your dollars that came in that month have a name and a place to go. You'll see that more when we walk through a budget. Now, my budget system is split into five major categories between income, fixed expenses, long-term savings, short-term, also known as a sinking fund savings, and spending or discretionary money. You should use a budget in the format that is easiest for you, either paper and pencil, which I use myself, digital, such as Excel or Apple Numbers. I'm going to show you an example of a digital budget on Excel today. Or maybe it's a budgeting app on your phone, such as Everydollar. That's a popular one. Or Rocket Money. Now, I hope to even give you resources that you can use in each of these formats for free. Coming up in this video, we are going to explore how one creates and uses a budget broken down into bite-sized chunks. So join me as we create our first budget together here and start the new year off in the right direction. So on my screen here, you'll see that we have it labeled here as January 2025. We have the beginning balance. The beginning balance is typically, if this is your first budget month, your bank account balance. Or you can use a different starting balance if you know whatever you want to start with. I recommend using one checking account for this budget that tracks everything that everything comes into and flows out of. And by the end of the month, you can then balance it with the budget. But first, before we jump in too deep, I want to go over a couple tips. If you've never budgeted before or want to improve your budgeting skills, these are a couple things that I think are important. Like I said, it follows one main checking account. Have one account where pretty much all your income comes in and all your expenses or savings get paid from. Figure out what this account is for you before you start this budgeting process. Now, you don't have to do that. You could just do more of a budget that just kind of tracks where you're spending. You put it in. You don't really track it necessarily with a balance every month, but instead you just track your income versus expenses and make sure that they balance out or that you have some money left over every month. Perfectly fine either way. I try to do it where I have a balance that kind of keeps running. The second tip is I want you to write down every single transaction that that earned you money, that you spent money, or that you saved money in the last month. Everything that was an in and an out to your checking account or to you want to track, anything that went through your credit card, through your debit card, a check, cash withdrawals. I want you to categorize them into rough categories, such as kind of like our five major categories. So income, uh, savings, spending. But I also want you to categorize them more specifically into the income and then things like this is rent, this is groceries, this was eating out. What this does when you categorize and write down every single transaction, it kind of gives you an idea of where and how much you spend in your budget on different expenses. This is very important because many people have no idea where they're spending money. And actually, that is where we can sometimes save the most amount of money by just trying a budget because we start seeing where we actually spend money. So, enough of my ranting and raving. let's jump into this budget. I've taken a liberty and kind of created a budget here. So, first off, the first category you're going to fill out is the income right in front of your screen here. The income, this is basically everything that increases your bank balance or any credits you may receive on a credit card statement, for instance. Things like your take home pay from your job, any interest you may earn, any cash gifts you may gain, or any refunds you may have that were given back to you. You would list it all out. So you might want to include reimbursements, for example. So the next thing is you have the budgeted versus actual. The budgeted item is when you're starting the month, like we are now. We're at the beginning of January. Let's figure out what we're going to do. You put in what you expect to have happen. Now, sometimes you don't know, but many things, the big things, you typically have an idea of what you need there to be able to spend. So, for example, this couple has two jobs and their take home pay is $1,000 and $500. Now, I did put in some actual numbers. Now, you would not have those when you're initially budgeting at the beginning of the month. You're probably going to fill those in as the month progresses and you have those things happen, or at the end of the month when you go to wrap it up this budget. So the income budgeted was $1,500 and the actual is actually $1,450. So that's your income. Next, we're going to go into the fixed expenses. This is your first expense categories. These are things that don't change much or really at all. They're also things that pretty much happen every month or about every month. Kind of things you know that you are going to have to pay to keep yourself protected or warm, uh, or that must get paid before anything else. And you know how much it's going to be within reason. Common examples: rent or your mortgage, utilities, a cell phone bill, any giving you might do. I have an extra one in here that I do like, and this is how I split it up, is if you have credit card debt or any kind of personal loans, the minimums on those payments, because they're pretty normally set, I put them in fixed expenses. This helps me know that I have the minimum payment paid. Now, if you've seen some of my other videos like credit cards, on credit cards, you know that I do not believe in paying only the minimum. I believe in only paying off the statement balance or the whole balance. But we'll get into where else you put this, like if you wanted to pay above the minimum, where you would put that in. So we're going to scroll down here. You see in the budgeted versus actual spend, it's a little different. I filled it in again. Total fixed expenses were $815. The actual spent, you haven't paid your cell phone bill, let's say, yet, so you're actually at 710. All right. Now, right below that is I'm just going to go through this quickly here, is just a little spot for some goals. If you have any goals that you want written down that you want to keep track of, this is a great spot to do that. The same thing here over next door is notes. Anything that special happened this month that you want to remind yourself of, I would put that here. So the third category, and technically the fourth, they're kind of together, is the long-term savings category and the short-term savings categories. So I'm going to go first through long-term savings. This is where we put like that amount above a minimum due. So let's say the total balance on that card was $85. We put in the $50 here, we put in the minimum of 35. We're going to pay the card off in full. Okay, this is where you would put that. The other idea for a long-term savings would be like a Roth IRA, or if you had a taxable brokerage account that you put money into. One thing that's different about these two categories versus just the fixed expenses is you have the account balance at end of month. So this is at the end of the month after January, you've done all your transactions. Let's say you've saved $50 to your Roth IRA, and that brought your balance on your Roth IRA at the end of the month to $250. It started at $200, it grew a little bit, and then it went back down, and then you deposited $50. Let's say it hit 250. You're going to put that amount there. Just kind of a tracking way to know what your account balance is on your budget. The second thing is your short-term savings. I also call that the sinking fund savings. So you can see some examples here. We've got the emergency fund with a goal next to it. We've got a health savings. Let's say we set aside in a savings account a little bit just to pay our out-of-pocket maximum on our health plan. Let's say we want to save for a summer vacation. We're a couple months away from that. So maybe we've got at the end of this month, now we're at $600 because we've saved $100. We had 500, now we have 600. Once again, you can do the account balance at the end of month. One thing I want to note that's very important, you can do two things with these savings accounts. Now, like a Roth IRA, that's going to be a separate account you're going to pay to it. But like these ones that are more like your own personal inside your financial picture accounts, you can do one of two things. You can either have this money that are at these balances sit in this same account that you want to. And you just know that that's how much is set aside for those accounts. I cannot spend that out of this checking account that my budget tracks. The second way you can do it is you can actually create a separate bank account, such as a savings account, to hold these funds that you transfer these funds to every month or whenever you're supposed to transfer money. So, for example, let's say you want to put the vacation fund in a separate savings account. You transfer the $100 every month to this savings account. When the vacation comes along, you then transfer the money back from the savings account to your checking account for that vacation. You know it's $1,000. That's what your goal is. That's how much you're going to spend on your vacation. Okay, you kind of reimburse yourself back. I personally have a separate savings account for these types of things, and I track it in that capacity because I don't like them getting commingled with my other expenses because it's very easy to spend that money when it's sitting there and you see it all the time. So I'm going to go down now to the next thing, which is the spending total. This is kind of a unique feature. The spending total, though, is the fixed expenses plus the long-term savings plus the short-term savings combined. That gives you the budgeted and actual numbers. Now, we're for right now going to go off the budgeted number. So that totaled $1,115, the total between those. So it was the 100, the 200, and the 815. Next is the flexible spending limit. What this is it takes the total income of budgeted or actual 1,500 minus the spending total. This is the 1115, which gives you a total flexible spending limit of $385. And that will make more sense here soon as we move on to our fifth category. Right up here, this is what's called the flexible spending. This is like your discretionary or your variable expenses. You'll see some examples here that will make more sense. Basically, whatever your budgeted number is, you do not want to exceed that with your flexible or discretionary spending. That is your hard limit. Now, if you had something where you spent a little bit more or you saved a little bit more and that brought your actual down below budgeted, I would say that you wouldn't want to obviously go above that number. But in this case, we've budgeted $385. We cannot spend more than that. Now, the actual away amount and the reason that it's higher is because the actual versus what was budgeted is actually lower than what was budgeted. So that's giving us a higher flexible spending limit. So you can categorize this as much as you would like or as little as you would like. That's the point of it. Sometimes, for example, I have no idea how much I'm going to eat out versus how much I'm going to spend in clothing one month. And so instead of me putting $20 here for entertainment and $100 here for clothing, and then feeling like, oh crap, I need more money for entertainment. Can I take it from clothing? Well, that feels a little awkward. No. Instead, I like to just have an overall limit. We've taken care of everything important in our three categories before: short-term savings, long-term savings, and fixed expenses. We've now got the flexible spending limit. This is what you need to hit. All right. Now, I do label it out somewhat here in our example with some basics: groceries, gasoline, stuff like that you know you're going to spend money on. So you have budgeted an actual here. That brings us down to the total flexible. So this is the total of how much is allocated. This right here is what's a zero-based budgeting. It says this month's budget surplus or deficit. It's above $0, right? So this is a good thing. We're above $0. What I would say is we want to make it $0. Okay, so if this was how you were going to end the month, let's say, which it's never going to be exact, I would say let's raise $35 on our emergency fund. So we're going to change this from 50 to 85. Okay, what that did on the budgeted and the saving is that changed it now to a zero because it increased our budgeted amount, dropped the flexible spending. That equaled the flexible spending, equaled the limit, which was 350, which gives us $0. That's a zero-based budgeting. Every dollar that we took in of our income, the 1,500, got a category or got a name and a place to go. Finally, what it does is it also takes you to the ending balance. Now, the ending balance is going to be based off of not the budgeted, but the actual, because this is what you actually carried forward to the next month. And so this number right here, this 410, is what you would basically hope that it would match to your bank account balance. And then you would move that on as the beginning balance for your next month's budget. Now, a couple notes here. This over here, this category is if you go through this, let's say you had this $350 and you list out all of your categories like you wanted to, and they totaled, I'm just going to use the arbitrary number. If they totaled $50, if they totaled 400, let's say, you're negative. Okay. Now, if you didn't want to take anything away from here, which I would recommend not, this is why this stuff is first, is because we want to hit these goals first, and then let's figure out our spending. What you can do, if it's just you can just start eliminating categories that don't mean as much to you. But if you have a spouse, you may both need to decide on what means more. So one might think that eating out is way more important than clothing, but the other one might think the other. What it'll do is it'll help you figure out what you both think as the least emotionally attached to. And this will help you decide where to cut some of your dollars so that you can get back to a $0 surplus or above $0. Also, there's the transaction log down here. What this is basically a way to track all your expenses in a specific category. Now, for example, this is all eating out. I just did 3 quick transactions. They total up to $50.45. So eating out for that month was $50.45. What it does is it's a quick way to just say, hey, what actually was in that category? Because some people like to do it categories. Other people would rather just do it in per transaction. It just kind of depends. This gives you a way to add it up, figure it out, and then put it up in your budget, what you need for the actual. So overall, I hope this is helpful. Uh, I hope you're able to use this. I hope it'll be helpful to you. And I do believe in budgeting immensely. I think it's very important for a lot of people. I think this is our problem. Um, for me, it was my spending was out of control, and I kind of took that in and started saving more money, and that was what helped me get the wealth that I have. I'm very grateful for that. And so if you have any questions, please feel free to reach out or comment. Because we always, I mean, remember this, our whole goal is to make money simple and to keep it as simple as possible. One final thing I want to remind you of is use the budget that you want to use. If you're better with paper and you'll do it, do a paper budget. If you're better with a spreadsheet and do it in online digitally, do it that way. If you'd rather use an app, I know Everydollar or Rocket Money. I think Rocket Money costs money. Well, maybe not for the first version, but Everydollar has a free version as well. Those are super helpful apps. Do what you'd like to do, and it'll make it so much better for you and your household. So, this is Josiah once again with Simple Finance signing off. You have a wonderful evening. Have a happy new year. And remember to keep money simple.